accountant, his CPA. And after the call we had on Tuesday, I fielded a bunch of questions from the group, and I summarized those and sent those to Howard. So since Howard is volunteering his time today, we want to be respectful and keep this to under half an hour. So why don't we dive right into it? I guess the questions that I had for Howard.
So Mark, maybe it's easy if I start with a couple things.
Great.
Maybe I could get rid of some of these questions and try to explain how these work. Hopefully, I know most people are very confused out there, and to be honest, there's a good reason to be, because everybody's got a different opinion on this. As I'm sitting here right now, the banks and the SBA are still going back and forth on, and I could start with the, we're going to be talking first about the CARES Act, which is probably of most interest to everybody sitting in this room, okay? Which covers, the intent is to keep people employed versus on the unemployment lines. And there's a lot of confusion, a lot of uncertainty. There are no, I'm just starting to get, certain banks are just starting to send me their version of an application for this. This program works through the banks, and most likely you would want to use your company banker to apply through them. It will probably be most likely an online process of some sort or through some kind of a portal through the bank. Everybody's got this kind of drop dead date in their head that it has to be in tomorrow or the federal government's going to run out of money. I can only give you my opinion. I don't know any answers for certain. It's probably most likely not going to be in place by tomorrow. Any kind of a formal process in most cases won't be in place by tomorrow. Most likely at some point next week. Everybody seems to be trying to run into the same door all at one time. It's very similar, to like 3 weeks ago when everybody was in the stores trying to buy toilet paper. Okay, so the real issue here is, will the government run out of money on this program? You could be 100% certain that there's nowhere near enough allocated for this program. Will the government add more money to the program? I would say most likely yes. Can the government or the banks discriminate on these applications, who gets in first and who doesn't? I highly doubt that. It seems to me that if the government reduces the funds available, that everybody would probably share in that loss. And if the government, there might be a differential in when you might get paid out on it, but I don't believe that that you're going to get slighted if you get it in tomorrow versus Tuesday or Wednesday or Monday. Obviously, you'd probably want to get it in the first day if you can, but it's going to be a mad rush to get in. Your bankers are going to be completely swamped. It's going to probably be a portal or an online process anyway, and you're probably going to end up getting thrown into the pot. Okay, so there's two elements to this. There's two elements to the CARES Act that I'm dealing with right now, and one is it's called the PPP. I think it's the Personal Paycheck Protection. Okay, and there's a relatively simple equation that's set up, and we're not 100% clear on the look-back period, but it's going to be one of two look-back periods in all probability. One will be the fiscal payroll calendar quarter, the calendar year from 2019, or potentially a period from before the application, which would probably be April 1 of 19 through March 30th of 20, which makes things a little more complicated. The way we're looking at this, and there's various corporate entities. There's LLCs, there's S Corps, there's C Corps, okay? Everybody in this room may have a different entity that they're using. The computation for what's called the maximum loan is 2.5 times, and this could change also, by the way, 2.5 times eligible payroll, health insurance after the employee's contribution, state unemployment taxes or state income taxes that are paid by the employer, and any employer benefit plan contributions paid by the employer, okay, computed by using the monthly average over the 12-month period times 2.5. Any employees that make over $100,000 are capped at $100,000. And we're looking at this as if owners are also included in the computation, okay? If they're taking salary. We're also taking the position, if you're an LLC and you report self-employment income as an owner, that your salary would be included, capped at $100,000 also for the computation. We're not 100% sure that's correct because we have no clear, guidance on that particular item. Okay. The other thing that I forgot to mention, as far as the computation goes, is we're also considering 1099 contractors that are individuals that might otherwise be an employee as part of that computation. So that's a very important point if you're paying contractors by 1099 that are individuals that would otherwise be an employee. For instance, your accounting firm, if it's a company, wouldn't be included in that, your law firm. But individuals that might do, stocking in the back or something like that, that you might pay as a 1099 person, we would include in that computation. So that's the front end of this PPP. What we're advising our clients is to apply for this front end aid, irregardless if you think it's going to be forgiven or not. And the reason I'm saying that is because the back end computation, which is what is part of your questions here, rent, utilities, now you got health insurance, labor. The back end portion of this is far more complex to figure out what's forgivable and what's not. That period starts after you get the money and you've taken the loan. So there's like an 8-week period that follows when you get your money. And that computation for forgiveness is going to occur during that period. And it's contingent on how many employees you have. I think it goes all the way to June 30th. And if you're at full employment by then, in all probability, a very good part of this loan is going to be forgiven. If it's not forgiven, you could always pay the difference back, or you could, or according to what they're saying now, is pay it back over, I believe, a 2-year period at a very, very low interest rate, something like 0.5% a year. So, to not go after all the money you could possibly get up front as the maximum loan, I think would be a mistake. And everybody seems to be getting caught up in, what's going to be forgiven, and everybody's all worried about it, and they're focused on that. And I've honestly, I just do not believe in focusing on any of that at the moment. I'm focusing on getting as much money as we possibly can under this program and worrying about forgiveness later. So you got to be, cognizant of the two elements here that are involved. There's another program, I think the initials are EIDC. It's the Economic Injury Disaster Relief Program. That's also an SBA program, but that's done online. That's not done through the banks. There's a $10,000 immediate loan given under that program, and it's based on personal financial statements, company financial statements, gross profit. I have not gone through the process. I have other employees that have gone through that process for companies for us. We've applied for maybe a dozen and a half of them so far. And but the funds cannot be used for the same purpose as the CARES Act funds. So if you're getting money under that program and you're using it for the same purpose, you can't double dip on it. And there is an element that's also, there's a couple of really important points here too. There's an element of the EIDC that's non-recourse, not personally guaranteed, and the CARES Act funding is non-recourse. They're not looking to your personal situation to backstop these loans. And also, from what I understand, under the CARES Act, the forgivable portion is not taxable. So if your company was to get $100,000 and you fit into that category where all of it was forgiven, you don't have to pay tax on that money. Okay, so there's the CARES Act seems to fit your businesses best because everybody is in pretty much a similar position where business is virtually non-existent at this point. You've got great employees, you want to keep them employed, and the government wants to keep these people off of unemployment. So many of these people have already been furloughed or laid off. You're going to probably want to bring back a good part of them. And I think, and I can't tell you this for sure, but I think it's your employment levels at June 30th, which might determine whether or not a good part of this is going to be forgiven. And there's just so much information and so much conflicting stuff out there. Whatever I'm telling you now is the best, is almost about the best I can do. Because, there's just so much out there. There's so many things out there that are either conflicting or everybody's got an opinion on something, but the SBA and the banks have not got a final arrangement yet, and there's really not even a way to get at this money at this point. So I think hopefully that addresses a lot of what you might be asking. In your heads, if you could break these down into different elements, I think it helps you think the process through. The bankers are, we've approached it with our clients where we're getting involved with helping them do this calculation and put together the information in advance of the application so that they're prepared to go as quickly as possible and as accurately as possible, because we don't want to have any kind of a delay because something's not filled out accurately or something like that. So it's best if you talk to your accountant or somebody that could help you, look at these calculators that are going on right now. There's calculators to compute this thing to help you through that process of calculating the maximum loan amount so that you're prepared and you go in and you're not relying 100% on yourself or your bank to make that calculation so you can get the most amount of money possible. That's pretty critical out there, and that's really, the application looks really simple, but you really got to concentrate on getting the right maximum loan amount up front so that even if it's not forgiven, you got a really cheap non-recourse loan to deal with after the fact, which is not bad. It's good. If that's the worst case scenario, you should be happy. So anyway, that's kind of what we're doing here. That's kind of what is out there that I know. You're going to probably have a lot of very specific questions about hours worked and stuff like that, and that's more related to the back end of this, and that's the forgiveness portion. And I'm really not 100% clear on all those rules, and I don't think anybody really is. So I'm more focused on get the money, get the application in, and then ask for forgiveness later when we really know what has to be done. Like I said, forgiveness includes rent, utilities, and other things other than labor. The computation up front is a very labor-based computation, and it's got a multiple on it, and that's the maximum you could get. The forgiveness portion includes other items. So, hopefully that's helping a little bit. I could take some specific questions. I'm just not sure that I could help everybody with specific things, but I'm open if you want.
No, Howard, that was a great general summary. Ray Pugsley from Potomac River helped me pull together some of these initial questions that I sent over to you. And I know, Ray, you had a couple follow-ups you wanted to ask, which again, I think have applications to the entire group. So do you want to share those?
Well, let me start off with one right now. Thank you for all that information. But we have seen quite a few places where they talk about some program called like the SBA Express, which is not forgivable, but would be similar to an SBA loan, just without the hassle, that it would turn around fast and not require a ton of documentation. Yet I don't seem to find anybody who can give me anything definitive on that. Do you know anything on that you can help us out with?
Yeah, I've got a bunch of clients that have already gotten that, and one of my employees has been doing a couple of those for employees. It's only $10,000, and they've had success getting that approved right away. I think you have to go online, and you're going to have to get the paperwork online. Look under the SBA Disaster Assistance Program, and it takes you through the process online. And it should be, when this first started, you couldn't even get online. You couldn't even get the stuff through. Everybody's so focused on CARES Act. I think the website works better. And it's kind of a brand new thing, a few days old. So that you're going to get $10,000 off right away. And then, it's a loan. So you're going to have to pay it back. It's not forgivable. And then I believe the rest of the process would be probably applying for the disaster aid. It's probably going to include your personal financial information and your company information. Okay? The CARES Act really doesn't care about your financial statements. It's about the formula. It's about the labor up front. So it's a completely different animal. Now, if you use this money you get from the Express and the other loan, you cannot use it for what you're using the CARES Act money for. It has to be used for something different, which in your cases is probably easy to justify. I don't know that you mix and match. Let's put it that way. There's other things that your companies pay for that aren't payroll related or rent related or utilities related. Just buying goods is one thing, for instance, okay? So it's an online process. We haven't delved into it that much because it's just not that much money. We try to tell our clients, just go to the website and go through the process and try to grab it. It's not going to affect your ability to get money under this CARES Act.
Okay, so just to confirm, I was under the impression that there were at least three things. There was the PPP, there's the EDIC, which I thought was the disaster program that got the $10,000. But then I thought this SBA Express was yet another program that was some much larger amount of money that would be at some fixed rate that was no more than the normal SBA rate, but could be lower and would be a fixed either like a HELOC that you could take in and out, or that you could put on a payment plan over X number of years.
I'm only familiar with the first EDIC or whatever that's called, which was a much larger potential loan package at 3.75% over 10 years. And it's contingent on your financials and your personals. And I've had some clients get aid under that. I've seen as high as 500,000 so far that have actually been approved. But we were in the website a week and a half ago already. And it's already, some of these have already been approved. That's a standard type SBA loan. I believe the first 200,000, they came back and I said the first 200,000 would not be personally guaranteed under that program. Then I think they modified that to have the express 10,000 couple along with that, but don't quote me on this stuff, because my biggest focus has been this CARES Act, because it's, to me, is the largest, the easiest amount of free money potentially that my clients could get. And it's, I'm looking at substantial dollars in a lot of cases here for people. So, there's companies that employ, 50, 100 people, 200 people, and it's major money. So I've been focusing really on that more than I have on the other programs. And the other programs are not done through banks. They're not done through CPAs necessarily. They're done online. So, that there's a process that you just go through and do it online, and that's how you get to it.
So, Howard, I want to be respectful of your time, but got a question from Rich Wills down in Florida. And he said, is it safe/best to calculate the payroll off of last year's 941s?
I don't like doing that, because if you've got employee benefits, I don't like using that. I like using the final payroll register, because that has everything included. So all the gross pay includes all these elements. It could be sick pay, it could be vacation, could be 401k. We want to make sure that you take the full gross amount of the payroll, because some of these W-2s are confusing, and you might end up using less payroll than you could. So we're using the payroll registers. The banks, in all probability, will ask for the returns, but we're not using the returns to compute the benefit.
Yeah, and hey, if I can jump in, I did it both ways on the calculator. I used my 941s and then my, payrolls, every one of the 26 from last year, and I was pretty careful about making sure that we accounted back in for other benefits that wouldn't show up in the 941s, and the numbers came out very similar. But I think I know Howard's right, because Howard's is, but probably safest to do whatever he says, but it could work either way.
So
yeah, I've been toying with that, actually. I'm working on some of my clients, and I just feel 100% safer on the registers than on the W-2s. And I've also been toying with clients that have added a bunch of payroll the first quarter of this year, where their payrolls are much higher the first quarter of this year versus last year, and using a fiscal year to do the calculation, because it could mean $10,000 or $20,000 in a lot of cases. It's quite a bit of money, and for me to take the extra time to do it, it's worth it.
So Howard, a question that I emailed to you and it just popped up on the chat as well is, how do you calculate? You got to realize, I'm sure from working with Chris, a lot of these running stores, they have full-time employees, then they have part-timers, and then in certain cases, seasonal help as well. So how do you calculate all that?
It's simple. You take your payroll register and you add it up, okay? And don't take into account, it's employees that are paid. It's people that are getting paid money. So I don't take into account any of that. All I'm doing is taking the payroll registers, because that's really all they're going to be looking at. And then I also, if they get a 1099, I'm adding those into it.
So the actual number, you're telling me the dollars are more important than the actual number?
The number is part of the application, but I think where the number is going to come into play, and don't quote me on this, because this is where I'm not 100% clear, because it's on the back end. It's that June 30th number that they'll be looking at. So if you've got employed the same numbers, you might have the potential to have 100% forgiveness. So that's kind of what they're using the numbers for. They want to make sure you've got employees to be able to qualify for the act. So I'm using payroll. I'm not taking into account part-time, full-time, full-time equivalents, whatever it is. I'm adding up payroll and 1099s, and that's, and health insurance out of pocket, and employee benefits, 401k, that's employer's share, and state unemployment taxes. And I'm using that as my calculation to go to the 2.5. And where it benefits me to use a fiscal year, I'm using that for now. You know, I can't even tell you if that's right or wrong. I can't even tell you if they want a fiscal year or a calendar year, but the act it actually says that the previous year before the loan. Okay, so it almost implies that you would use a March 31st year end for your payroll. A lot of the banks on their proposed applications are putting December 31st payroll on there. It's the hassle factor is enormous to do a fiscal year versus a calendar year.
Got it. So,
Okay.
do you have time for one more question?
Yeah, I got one more, and then I got to hop off. I got a million calls I got to make. Sorry.
Got it. No, understood. Again, we appreciate the time. Anybody got one more for Howard or Chris? Anything that you've hit upon that is important that you can share with the group? Got one here from Michael Nolan. He says, most large banks such as Citibank participating in the PPP, and are the banks up to speed on the rules? And the next best, I think
I got a great answer for you on that one.
Okay.
All the money center banks are participating. Everybody. Okay, so you know, Citi, Chase, Bank of America, you name it, they're participating. They're taking millions of applications on this. All right. If you have a banker that you know, I don't know that they're going to be able to. They'll maybe be able to help you, guide you through this application a little bit, but they're going to be so inundated with requests that they're going to probably just forward you to their website or their portal to fill out this application. So that's kind of the way it's looking. If you have a smaller bank, what I would do is call my loan officer there or whoever your private banker is and ask them if they're part of the process. I'm finding that most of them are. Most of them have made an effort too. On minor occasion, they're not, and you may have to apply through a big bank.
Okay, Howard, again, thank you so much for your time today. Can't, on behalf of the group, can't thank you enough. Really appreciate it. A lot of good information. Why don't we let Howard go, and then we can stay on the call for a little bit, if everybody would like.
Hey, Mark,
All right.
I had one.
All right, guys.
Thanks, Howard.
Go ahead. All right,
So the one
my
thing I was
pleasure,
gonna
guys. Thank you. All right, bye-bye.
Yeah, the one thing I was going to say is just that, although I think the way we all think, we're like, I want to get the max loan, but I also want to know what this means after I get the money and how do I get the money back. They don't know.
Chris, I'm still on, Chris. I could add to that. I know that, the biggest issue I'm trying to tell my clients, okay, the biggest thing is that, it's very tough to get caught in the weeds.
Yes.
With how am I going to get it forgiven? How am I going to give the money back? Whatever. And I found that to be, I've almost found it to be unproductive to think that way.
It is. That's what I was going to say.
So hard to get out of your.
Don't worry about it.
It's so hard to get out of your way when you're thinking like that. And
Right.
I've been working on this for over 2 weeks straight, and I've just come to the conclusion, under using my own common sense at this point, that it's almost like an exercise in futility to think that way. It's crazy, but that's the way I'm thinking.
Yeah. And what it is, this is the way I would look at it. I'm just going to say, because I've been futile in all the stuff I've been doing, even though I have Howard in the background. I know he has my back, but is that go for the loan, figure out the max, and the calculations to get the max loan thing are actually pretty relatively simple. There are some 1099 things, and I won't, you can't ever go back to, try and get Howard in trouble or anything, but I I think a little bit of what I'm hearing is if you're going to err on the side of what to include in that, then go a little bit high. The risk would be that they would reject your application somehow.
I agree, Chris. And I'll tell you one more thing before I have to get off. If you're an LLC, okay, and you're showing profit and you're not taking a salary but a guaranteed payment, we're taking the position that self-employment income is going to be part of the calculation up to 100,000.
Right.
Okay, and that's a big thing to know, because if you're an S corp, you're typically taking salary, so that salary will be included up to 100,000 is our position. So
right.
It's it's kind of synonymous, but the act doesn't address it, and no banker's going to know the answer. I promise you. Okay.
Right. Yeah.
All right, I got to fly, guys, but thanks
All
very
right.
much. I'm going to hang up. Okay.
Thank you.
Thanks,
Thank you.
Howard.
Take care.
And,
All right,
and then just
bye-bye.
where I was going with that was that get the loan in, okay, get that application in tomorrow or whenever, and then take a deep breath and give it a few days until your banker and everybody knows more, because these guys do not know. They literally don't know right now. So, and I was trying to, and all these different, is it a calendar year? Is it a fiscal year? Is it 3 months of last year? Is it FTE or non-FTE? And there's just so many different numbers. Now we know, it looks like we know what's going to be on the application. Do that, and then they will get fed the information. Yes, you do need to know the requirements for the forgiveness. And it is clear that you're going to have to spend almost all that money on payroll, basically. At least 75% is the math on it. So if you've really cut payroll, even if you've kept everybody, you still are maybe having to, bring a lot back, and you may have to bring back more than you even think. Because, even if you brought everybody back, but people want to help, like, you're going to have to put more people on than you'd think you need to. But the information on that back end is, give it a few days, because it's going to take a while. You will need to know, though, when that money hits your bank, you do need to start having your spending appropriate for your payroll, basically, is the important thing. The other basically 25% of your loan, forgiveness money, like rent and all that other stuff, that'll get eaten up, no problem. The more of a challenge is going to be if you, like we do our retirement plan, 401k money, all at the end of the year. The contributions that we make in profit sharing and matching, we do that at the end of the year. So that's a big chunk, and that counts into your big loan. But it also makes your forgiveness amount, payroll amount, is higher. So you have to find, I'm checking with my 401k people to see if we can do some 401k stuff over these 8 weeks to help with that, instead of just, letting it go, or, cranking hours up beyond what people would normally get paid, which is weird. But I'd say give yourself some time to breathe after you get this in. And the actual application, the numbers on it are pretty simple. And then we'll figure that out. Okay. It'll make itself known as we get closer to, it's going to be a week or two till you get your money, probably. And then you still have time to adjust. But it sounds like your 8 weeks is going to start ticking the day that money drops in your account. And at that point, somewhere in there, you got to spend 75% of the money on your payroll to get forgiven. But just relax a little bit.
Yes, not easy to do, but I think that's good advice. I'm looking at the Zoom chat, and there seems to be not complete clarity on the whole employees versus full-time equivalents. So does anybody have any clarity on that? I just saw a text from Ellen. She says her banker doesn't even know. So I think that probably—
Don't even talk about it. Don't
Yeah.
even waste our time, because it's not known. So
Right. Okay.
Yeah.
All right. Good. Anybody else with anything they want to share, or any questions for the group? So if not, I'm going to let everybody get back to it and get back to focused on their paperwork and their application. And I think people seem to be getting a lot out of these calls. I think next week we'll send you guys an email. Maybe we'll organize a call. People seem to want to talk about marketing and what's appropriate and how to manage their marketing during this time. And I'm going to reach out to a couple of people who've been doing the virtual fittings, and maybe somebody can jump on the Zoom call and share how they're doing their virtual fittings. So I think that's something that would be of benefit to the group. So Chris Hartner, thanks again for getting Howard on the phone. He was very impressive. And yes, I see your note. Don't steal my accountant, any of you. So I promise you I won't steal him, but he was good. So he's definitely worth stealing. So, all right. Well, look, thanks again. And yes, Parker, I agree with you. I think Howard is a really good name for an accountant. So, all right. Look, thanks everybody. Stay sane, stay healthy, and I'll see you online next week.
Thanks, Mark. It was
All right.
awesome.
Bye, guys.
Thanks, everyone. Bye.
Bye.